What is going on YouTube? Welcome into another pre-market here with the Everyday Growth Advisors. Hope you guys are having a good morning wherever you are, or a good evening. We have some market wraps today, so we're going to be pretty much doing CPI projections. I'll be giving you all of the breakdowns of scenarios involving the distribution for different outcomes. We'll dive straight into that right now, and then of course go through the macro and the technicals right after that. So we have very simple expectations for CPI, pretty much 7.9% or 8% year over year, which is in line. This is the base case. This is pretty much going to be a as expected consensus for CPI reading. And this is likely to be viewed positively or slightly positively by the market, that CPI came down just a little bit. And this should send, the market up, modestly, like maybe looking at about a 1 to 1.5% rally in the S&P 500. Then you have pretty much two more cases to the bear side and two more cases to the bull side. So then from 7.9 to 8, you go to 8.1 to 8.3. This is going to be pretty bad. This would mean that CPI comes in higher than expected. That's going to be pretty much in line with what has happened previously. The last time this happened was, I believe, in August. And this should send us down by about 2% or 3% on the indices. And the last one is if we get a higher than 8.3 print, which is 8.4 and above. And that is pretty much back to July levels of inflation. So that is going to send a lot of shockwaves down. We might see kind of a, big down day, pretty much like a 4 to 5% down day on the SPX if CPI prints 8.4 and above. Then also on the bull side, you have less than 7.9, so you're looking 7.7 all the way to 7.9. So pretty much 7.8, 7.9. This is a slightly bullish scenario, which would be a better case for the Fed to pause tightening. and this should also get us the S&P 500 higher by about 2.5 to 3%. And then below this, 7.6% or lower, right? That should see us sending the market up into a really nice rally, like talking about 3 to 5% rally. This should send stocks really much higher, because this will bring the 10-year yield below 4% in terms of the terminal rate. So there you have it. That's all the scenarios and the outcomes. CPI will be out, I believe, tomorrow pre-market. There's also a jobs report that you have to keep an eye on, which is, in my opinion, arguably more important than the CPI number, because remember that we are looking for the unemployment rate to go up to 4% if we want to see changes in inflation. So if CPI comes in as consensus, but then the job market becomes stronger, that's bad. If CPI comes in as consensus, but then job market worsens and comes in at around 4% unemployment, then that's probably a bit better. So when looking at everything as a whole, we need to look for the jobless claims or the jobless number to go up rather than go down. And if you're confused as to why this is the case, remember that if there are more people looking for jobs, that means that the labor market is more competitive. If there are less people looking for jobs, that means that companies have to pay more to get more people into jobs. And if companies have to pay more to get people into jobs, they're likely to pass that cost on to consumers, which raises the prices of everything. So that's the explanation as to why we want unemployment to go up instead of down in order for inflation to actually improve. Okay. Now, from a macro standpoint, nothing much has changed except for the dollar that took a little bit of a dive yesterday. And also the VIX has approached the key level of bounce that we spoke about and bounced nicely off the 23.8. So we have been following this. If you have been watching the live stream, we've been covering the VIX bounce at 23.89. We're seeing a little bit of a sign of that, but remember, we need to get up to around 28 to confirm this move. So as of right now, we'll be watching very closely if we can break and hold above 26 on the VIX for that upward move. In the meantime, down here, I already loaded up some UVXY shares for bet on volatility instead, which I've already mentioned on this live stream multiple times. The US 10-year yield continues to stay high and at about 4.15%. Yeah, we have indices moving in. Of course, as I mentioned, right after FOMC, we mentioned that there was the opportunity short-term for a bounce. That's exactly what happened. We've been playing that bounce on the Discord with our team. We played a nice bounce across most of the mega caps, which was Google, Microsoft, and Amazon, which didn't really actually move in our favor, but that's okay, because Google and Microsoft and even what was the third one that we played? Google, Microsoft, and Apple. Yes, Apple. And Nvidia too. Those paid more than enough this week. As of right now, I am up $30,000 for the week in terms of the weekly P&L. So lots of nice bullish trades here. Obviously took some losses as well on Amazon and DDOG, so it wasn't really all just green. Remember, you have to always manage your risk. And yeah, so far it's been a good week. Not going to overextend myself, and definitely not going to bet anything into CPI. So whatever opportunities I get today during the market will be traded, and after that I'll be closing all my trades out in anticipation of CPI. So S&P 500 still remains in that between those two pivot points that we've spoken about, 3950 and 3640. We're still trading between. 3800 still remains a very, very fought over level by both bulls and bears. This wave up was a wave of short covering. That means shorts taking profits after FOMC. And now we're seeing that wave reverse back down, so it's time to go possibly short again. Now, obviously, there's no way to tell whether we should, properly go short here, but then the move below 37.86, which is the low of yesterday, should give us a nice extension to the downside at 37.50 before another bounce. That's on the S&P 500. And on the NASDAQ, we have a similar situation. We came right back to the 23.6 as I was expecting, and rejected there, so we might see a reversal back down into the $10,600 level. If we can break below this, $10,895 or $10,900 level, That should send the Nasdaq down back again. So that's going to be the key pivot for today. Russell 2000 also looking like it is making a lower high here. So we'll be confirming with the lower low very soon to see if we have that confirmation to take more downside moves over here. So there you have it. That's breakdown of technicals and macro and CPI. Decided to do it much faster than usual today. Yeah, if you have any questions, make sure you put them in the comments right now. You want me to break down a chart? You want me to break down a ticker? Go ahead, put it in the chat, in the comments. And thank you for taking your time out to be here, by the way. Make sure you hit that subscribe and like if this is your first time here. Appreciate you taking that time out. Now, we are also looking at some opportunities in the market right now. Obviously, short opportunities are abundant, and you want to play the ones that have moved up the most. Have a look at Caterpillar in a supply zone right here. We could expect this stock to pull back in the coming days. Probably not right away. It needs to consolidate a little bit first, so we'll be watching this one closely for possible consolidation. Another one that might see continued downside might be FedEx. And FedEx is an interesting one because on a weekly chart, this is in the bear flag. You know, it's rejecting a very key pivot over here, which is also, you know, kind of coinciding with the huge volume node. So rejection of this level here and continue move to the downside would be confirmed with a move below 149. And that would send us down back into 120s, which is a nice downside trade if we can get that confirmation. We've been seeing some bullish flow on Square this past week, betting on 68 to $70 strikes. As of right now, I don't want to take any action, not until we get above 64, which is the key pivot for Square. And Tesla, we've been covering this one very often on the live stream, and I've mentioned that it was in the megaphone pattern. Yesterday came all the way down perfectly into the bottom of the megaphone and bounced right there. So beautiful play. Obviously, we caught a piece of this on the way down sometime in, I believe, last week. I scalped Tesla, and yeah, ever since then, just been letting this one play out. I'll be waiting patiently to see how we can play the reversal or take further downside here. If it can hold below the 23.6 extension at 189.50, then we'll likely take extension down into 184, which is the next level of support. Nvidia also, we got lucky 2 days ago with bullish news on this one, and then it could reverse back down today. So pre-market's down about $5. We took profits already on this, so no need to worry about that anymore. And Meta is up about 5% or 4% this pre-market on news that it's laying off jobs. 5%, yeah. This one might be one to watch today for a possible catalyst because this stock has been oversold after earnings. So we'll be watching this one closely as well. Not to mention, we also spoke about financials being bullish, but Goldman Sachs was mainly the one that moved yesterday. So I'm looking for a short opportunity on finance sector right now, if we can get it in the next 1 to 2 weeks, along after CPI data comes out and we know more about jobs numbers. So yeah, that's all I have for you guys today. Short and sweet, keep it, you know, succinct. That's all. That's all I have. Any questions? Any tickers you want me to break down? Anyone here who you know, needs any help? Go ahead, put your you know, your comments or requirements in the chat, and I'll get to them right now. I'll wait a minute or two and see if you guys have anything for me. If not, that is concluding this stream. Dollar index bouncing pretty hard here, so TQQQ. That's pretty much the same as NASDAQ, right? That's just a leverage ETF. So, okay, we'll go through it. Let's see here. Let me use this. So this is going to track the NASDAQ. So whichever way the NASDAQ goes, this is going to go. So this is trading in a range right now, and obviously there is a lot of pressure for this to the downside. This being a levered ETF, it obviously is going to have more pressure to the downside than the upside right now because people are probably shorting this one. It looks like a rejection here, at $18 or $19. It's going to continue for the downward trajectory back into $17, if that's the case. And if we can get a bounce above $19, let's say 1950 would be a good spot for us to take some upside exposure if we can get a breakout with good volume. This is based on if CPI data comes out better than expected, then tech stocks are definitely going to rally because it's going to really affect the terminal rate of the stocks as well as the 10-year bond, which is used for valuations of these stocks. So the pivot here really is where we are right now. 1850 is where we are. $19 is really a pivot. Looks like we rejected there, and looks like we want to go down and retest $17.80. And if we get below that, then likely go down to $17 to retest that low again once again. So that's your TQQQ summary here. Devontae, love the channel. Thank you for doing this so consistently. Yeah, no problem, man. I would appreciate you sharing the stream with anybody who you think needs help. We do this for you exclusively because we want to help as many retail traders as well, to navigate these markets. And so truly appreciate you guys, being here and taking our time. How are you drawing these yellow lines? Oh, TradingView, just go on this left side panel, find something called a horizontal line right here. The shortcut for it is alternate H. Alternatively, use the toolbar. If you have TradingView Pro on the bottom, there's a little star here where you can make your own toolbar. This toolbar right here, I have all my tools in here. So you can star them and whatever tools you want. Like for example, I use these very often, like a trend line or the horizontal line, parallel channels, or anchor VWAP. You can put them all down here. So, if I want to use a highlighter, I can do that. If I want to draw a head and shoulders pattern, I can do that, right? Yeah, so you can put all your tools right there in TradingView. So yeah, Magesh, I hope that helps you. Okay. All right, guys. Well, it's 10:30. Market just opened. I'm going to be trading live on Discord with the Discord community. So I will see you guys on Friday once again after CPI. We'll break down a post CPI, and then we'll go through what's going to be, what we're watching for the next, obviously, couple of weeks. Crypto is also going through a meltdown right now. Bitcoin's down to 17,000 already pre-market. So yeah, watch out for all of those things. All right, guys. Have a great trading session, and all the best. And peace out. Bye.